Alright, my fellow financial warriors, and welcome back to the channel, where we strip away the BS and get down to the brass tacks of making that money. Work for you seriously. If you're tired of the same old, tired financial advice, you're in the right place. Today, we're tackling a topic that's been buzzing in my DMs, and let me tell you, it's a good one. Many of you ask me, what's the secret to making serious bank? And I tell you the truth. I tell you about patience, about anti-intuition, about ignoring the noise, and about companies like the one we're about to dive into, American Pacific Mining. But guess what? Most people just don't believe me. They want the get-rich quick scheme, they want the magic bullet, and they want it yesterday. Well, buckle up, buttercups, because today we're talking about real wealth creation, the kind that requires a little bit of smarts, a little bit of grit, and a whole lot of foresight. We're looking at a company with a market cap of $45 million. Yeah, I know. Some of you spend that on your morning latte. Just kidding, kind of. But this $45 million company, my friends, is loaded, and I mean loaded, with upside potential. And here's why. Warwick Smith, the CEO, a man who's been nominated for CEO of the Year by SP Global Platts, and whose previous company, Western Pacific Resources, was the #1 performing gold stock globally. In 2021, this isn't his first rodeo. Folks, this man knows how to pick winners, and he knows how to make deals. He's the kind of guy who makes you wonder if he sleeps, or if he just dreams in dollar signs. And what makes this the absolute right time for them to be ramping up activity, you ask? Well, American Pacific is pretty unique in this space. They're transactional by nature. Since day one, they focus exclusively on the Western U.S., on high-grade assets, the kind that major players salivate over. But here's the kicker. If you look at their latest financials, they just closed a $10 million financing. They've got $4 million in cash, sitting in escrow, $20 million in equity holdings, and another $20 million that could come in via bonus payments. Do you hear that? That's almost their entire market cap covered by their assets. So while everyone else is scrambling for cash, these guys are swimming in it. They are in a solid financial position with two incredibly high, great exciting assets in the Western U.S., and they're about to start drilling. Immediately think about it. When most junior miners are begging for investment, American Pacific is like, nah, we're good, we got this. That, my friends, is a serious competitive advantage. And for those of you saying, why do I know Warwick Smith's name? Well, like I said, he's a big deal. He's been in the business since 1999. In 2021, his company was the top-performing gold stock globally. They were nominated for Deal of the Year, CEO of the Year, and Rising Star Company. It was a great time in the company's history, and they used that strong currency to acquire another company, Constantine Metals, which brought them the Palmer Project. They sold that last year to Vizsla Copper, and they own 15.7% of that company. The guys behind Vizsla have taken 3 companies over $2 billion. So, they're backing the right horses. And this, my friends, is why you pay attention to the management team. It's not just about the assets, it's about the people who are steering the ship. And speaking of assets, they're about to launch a 15,000-meter drill program at their flagship Madison project. In Montana, this is a past producer that has already delivered 2.7 million pounds of copper at exceptional grades. When Warwick first looked at this project, in 2016, he missed out. But in 2019, he got it, and it's been a gold mine, or rather, a copper mine. It produced 2.7 million, ranging between 20 and 35% copper. Let that sink in. Your average copper mine produces around 0.5% copper. We're talking about grades that are 50 to 70 times higher. That's not a typo. That's 50 to 70 times higher. It's like comparing a regular lottery ticket, side by side, Madison and Broadway. Broadway has produced 144,000 ounces of gold in oxides near the surface, at an average of 9.9 grams. Again, the average oxide mine is around 0.5 gram to 1 gram. So again, we're talking about grades that are 10 to 20 times higher, 4 kilometers by 2 kilometers, and everything has been focused between these two mines. But they're going to drill through a bunch of other targets, and drill for the porphyry, which is where the real excitement begins. What would success look like, you ask? Well, they're looking to hit one of the other 5 skarn bodies. They're looking to hit the porphyry. Think of these systems like a layer cake. The skarn is near the surface, but below that there's a massive body, the porphyry, that's pushing all these fluids up and creating this high-grade material at the surface. If they hit that porphyry, it's a game changer. Companies like Hercules, which had a $30 million market cap with 300 drill holes near the surface, drilled a deep hole, hit the porphyry, and suddenly they had a $300 million market cap. And Barrick invested $35 million. In it, KMB Pfizer. Similar story, that one in British Columbia drilled under the porphyry and had excellent success. So, the upside here, my friends, is absolutely astronomical, and it gets even better. American Pacific also controls the Red Hill Gold Project, just 12 kilometers from Barrick's Gold Rush discovery. Barrick hit big there, and now Warwick and his team are seeing the opportunity at Red Hill. They've paused discussions on Red Hill because they're likely to drill it themselves. Why? Because Red Hill was drilled in 2006 by Barrick and hit a 100-plus meter gram hole at depth around 650 meters down. They hit roughly 25 meters of 5 grams, and then 13.1 meters of just over 8 grams at the time. Barrick thought that was deep, but now with discoveries like Goldstrike and the 4 Mile discovery, which Barrick's former CEO, Mark Bristow, thinks will be bigger and with higher grades than Goldstrike, which produced 13 million ounces at 10 grams. Well, Red Hill is looking incredibly compelling. It's within the same range, along the same trend, and they haven't drilled it deep enough to hit that prime gold strike like Windband Formation. So, the potential for a massive discovery here is very, very real, and it's rising to the top of their portfolio. It also makes it compelling for Barrick. Again, yes, you could certainly make that argument, which is exactly why they might drill it themselves. Now, one of the most attractive parts of this story for me is their strong financial position. They have nearly $20 million in equity holdings, $20 million in milestone payments, and $14 million in cash. How does this set them apart from other junior miners and reduce risk for shareholders? Well, for starters, you're not worried about them needing to finance. They have more than enough capital to get incredibly aggressive at both Madison and Red Hill. That 15,000 meters is going to cost them roughly 6 to 7 million Canadian dollars. And if they want to drill at Red Hill, they'll need a couple million more. They have all that capital. And then some. The other nice thing is that the $20 million in equities came from selling assets. They sold Palmer to Vizsla Copper and Tusora to ICG Silver and Gold. They've been very careful to sell these assets to teams they believe can advance them and have a lot of success. Especially when taking back equity, you want to back good horses. And they believe they have. They also have 3 other assets, Ziggurat and Gooseberry, that they're looking to transact on as well. Their stated goal is to have an equity book worth roughly $50 million. That's more than the market cap of the company today. So there's a lot of room to grow, capital-wise, that they can then deploy on the assets they like. And speaking of the sector, what about all this merger and acquisition activity we're seeing? Dolly Varden, Kango, Equinox, Aura Mining. Is this a healthy indicator for the sector? Absolutely. Warwick says he'd like to see more of it. He thinks Sean Kung at Dolly Varden is one of the better younger guys in the business, and he was happy to see that transaction. The more these companies come together, the more relative strength they have to go after these assets and see them grow. From a U.S. perspective, it's incredibly important to have these homegrown metals, and putting these companies together gives them more focus. Own strong management team to drive it ahead. There are roughly 2,000 junior mining companies in North America and not 2,000 strong management teams. So if you can put these companies together under good leadership, you'll see more success. It's great for shareholders and great for the advancement of these projects and the health of the overall junior mining sector. Well, it's significantly better than it has been in the past few years. For a long time, metals prices were moving, but juniors weren't. There was a big gap. But now, companies can raise capital and create excitement with success. The metals have moved so much, it's dragged these companies along with it. If we get a risk-on market where there's a spotlight on it, you'll see a big lift, and that's what everyone is waiting for. Now, let's talk copper. For those of you looking at adding a copper miner to your portfolio, copper, to me, is probably the best setup for every one of the metals. Every American requires 12 pounds of copper each year just to maintain their standard of living. Most people don't realize that. Humanity has mined 700 million metric tons of copper in the last 10,000 years, and we need the same amount over the next 18 years just to keep today's lifestyle. That's insane. And that would require 6 new Tier 1 copper discoveries, when it takes an average of 17 years from discovery to production. You can see the challenges. We're in a position now where you've got things like Project Vault, and when governments hoard industrial metals, prices stop following normal cycles, global power demands are going to rise by 50%. By 2040, that means adding another 330 Hoover Dam-type assets over the next 15 years just to get to that additional 50%. There are many reasons for copper to be the big metal over the next couple of decades, and there just isn't enough copper to make it happen. So you're going to see, and we are seeing, all-time highs today. That's why projects like Madison are so important, particularly in the U.S., where the world is becoming more insular. We're facing a copper crisis, my friends. Warwick hadn't heard it phrased that way, but he agrees it's probably the best way to put it. And here's another kicker. There's no substitute for copper. None. And even if you had enough copper, you don't have enough smelting capacity. In the US has 2 smelters, one in Utah and one in Arizona. China has 16 smelters. So even if you had all the copper in the world, you'd have to ship it over to China to have it refined and then sent back. That's why when Trump announced tariffs on copper, the price of copper spiked. He then clarified, not on refined copper, and the price peeled back. But now it's gone above that because of the copper crisis. I think the administration is working on getting more smelters. In the US, Warwick makes the assumption the answer is yes, but it's not a one-term problem, and it can't be turned around quickly. Building smelters is expensive, and the time it takes to permit them and put them into construction is decades, not single years. It's a long-term problem that will require a long-term approach. You can't put up a smelter like you can a condo building. Where is copper used in our everyday life? If you can't grow it, you have to mine it. That's a key thing to remember. Copper is used in your cell phone, in your laptop, in your home, copper pipes, copper wiring, for your home phone, for your internet. It's used in automobiles, quite predominantly. As we move towards EV vehicles, conventional cars take 18 to 50 pounds of copper. A plug in hybrid takes 85, a Tesla takes 120. If you're going green via copper. There's no other way. Now, any thoughts on this gold price action since the start of the year, what momentum we've seen, and the direction we could be headed in? Gold is telling us something. We live in a highly volatile world today. 5 years ago, gold was roughly $1,600. Today, it's just under $5,000. Let's call it $4,500. That's roughly a 160% increase over the last 5 years. Gold is a flight to safety. We're in an incredibly volatile world, and that's what we're seeing. We're not finding as much gold as we did before. It becomes more difficult as time goes on. Mines are deeper, lower grade, and found in more challenging parts of the world. This is why the US is becoming more mining friendly, particularly under this administration, where they're saying, we need these metals, and we can't rely on other countries. So, let's look into our own borders in Canada. Well, Warwick is optimistic. He'd be remiss if he didn't say a new administration would be incredibly helpful. They've had the same government for a very long time. Under Carney, it's been better, but saying the right things and actually making changes are two very different things. If they get a conservative government in the near future, they'd see a lot of opportunities to open up. Canada has all the natural resources you could ever want. Oil, gold, copper, everything exists there in abundance. They could be the richest country in the world if they were able to access those things. And they've shown time and time again they can access these materials in an environmentally friendly way. Amen to that. Now back to American Pacific. Why pay attention to them right now? They are unique in the space, fully funded, lots of cash, lots of equities. They've shown the ability to transact and continue to build that equity book, which means they don't have to go out and raise capital. They have to, says the CEO. Most compelling Western U.S. assets that are out there that have traditionally given them spectacular grades. Now, they're going to do the largest, most well-informed drill campaign ever. In Montana, it's an asset that has continually given them high grades and excitement in the market. And these are the drill shots that can really create massive gains. They're taking those now, and they'll go off and do the same. In a part of the world, in Nevada, that is known for producing 5 to 10 million ounce deposits. They feel like they have the opportunity for that, and they're going to drill that as well. So you're in a position where your downside is protected by cash and equities, but your upside is uncapped by potential excitement. What's the inside scoop on raising capital? What's the deal breaker? It's a multifaceted thing. Relationships. They have good shareholders. Their largest shareholder is Michael Gentile. He owns 8.5% of the company, and Michael Gentile is known to pick the winners. He's a great human being and a great interview, so they have good shareholders. But then the assets themselves and the laid-out drill program is compelling. There's a moment for people to recognize if they hit here on what they think they may. Then you've got that opportunity for massive lift, which is always what you want in junior companies, but you're downside protected, which is unique by having all this cash and all this equity as well. The ticker symbol in the US, it's USGDF, and in Canada, it's USGD. So, my final thoughts for you. Listen, it's going to be a massive summer for this company. They are very excited to get out and drill it and take some of these deep shots, in particular, that could cause an awful lot of excitement. I sense the excitement, and Warwick has a proven track record, so continued success to them. And remember for you, my friends, stay boring, stay patient, peace.